please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, actually the market's now gone into one gain, 1:1 in terms of advances and declines. So a little bit of trimming in terms of long positions. The mid cap is in the green, but just 0.2%. In fact, it's flat across. The Nifty Bank, of course, has reduced its losses. India Bulls Realty is continuing to surge, and PC Jewelers is continuing to fall. It's interesting how the market is wanting to read the stakes in the PC Jewelers counter. Market not very happy with the transaction reported intra-family, but still would like to know more. None of the promoters of the company have sold any shares in the market. However, one of the promoters has
gifted some of his shares.
Mr. Padam Chand.
Yeah.
Okay, actually we have Sanjeev Bhatia with us. Mr. Bhatia, exactly what is this transaction? The market is extremely troubled. Mr. Param Chand has sold to his own family members. What exactly is the transaction?
Let me just clarify in a minute. There are two real brothers, Mr. Padamchand Gupta and Mr. Balram Dutt, who set up this business. So Mr. Padamchand, there's an age gap of almost 20 years between the two brothers.
Okay.
And Mr. Padamchand Gupta is now 68 something, and he's not involved in the day-to-day running business or anything. He's semi-retired, and it's only his younger brother, Mr. Balram Dutt, who's MD and CEO and looks after all the operations. There's only one family member involved. Now, Mr. Padamchand Gupta, out of his entire holding of more than 25% in the company, has gifted some part to someone in his family. I'm not allowed to disclose the name on that. But, and this is the only thing, nothing beyond it. And given the very fact that he is not involved in the business and the promoter stakeholding still remains very comfortably above the 51%. There's no management change. There's no change in the company's strategy. There's no change in the company's operating effectiveness because of this thing. So it's a personal decision which is took.
Mr. Bhatia, sure, it is a personal decision, but if you look at the promoter shareholding, it actually has gone down quite a bit if you compare it. Since the last 1 year, it stood at about 68% in 2017 March, and now it's at 60%. Just trying to get to know if there's any more selling that we're looking at from the promoters?
Yes. So there's a logical reason, because the company had issued this preferential CCDs and CCPS to DVI and Fidelity. And once it was a fully convertible instrument, and once this thing was converted into equity, the equity base of the company went up, and the promoter's shareholding declined only as a percentage, not in the absolute sense.
Okay. So
the difference in March 17 and March 18 is because of the conversion of those CCDs and CCPS into equity, and it's only a percentage decline and not a absolute decline.
Okay, so
now yes, and Mr. Padamchand, whatever he has gifted has been made available on the exchanges.
Okay.
And it's a very, very negligible portion of his overall holding. So I don't think that should make really any difference to the company's workingness or fundamentals or its growth plan.
Okay, so this transaction is entirely because of the age factor and the fact that as you said, and all the disclosures have been made, Mr. Bhatia, on this regard, or you think?
Yes, every disclosure is there on the exchange. We are that way compliance company.
Okay.
And the main promoter, Mr. Balram Dutt, who is also the MD and CEO of the company, he continues to retain his entire holding.
Okay.
Without having sold even a single share.
Okay. So, also, Mr. Bhatia, there was this buzz in the market that perhaps there was a tax inquiry as well. Has there been any inquiry on that regard, or would you want to clarify that?
Nothing. It is a complete rumor, baseless rumor. I completely deny it.
Okay. And
as a matter of fact, we were facilitated last year by Jindal Jewelry Export Promotion Council as being the highest taxpayer company in the Jindal Jewelry sector in the country.
Okay, so at the moment the promoter shareholding is 60.24?
After Mr. Padamchand Gupta has gifted, I think it may have declined by 1 or 1.5%.
So the person to whom he has gifted will not be classified as promoter?
No, because a gift can be done only to a near or whatever relative, but they are not classified as promoter.
So,
how much does it drop to?
Yeah.
Sorry?
How much does promoter holding drop to?
It must be 58.5 or 59.
So he has,
something like that.
So he has transferred about 2%.
Something like that.
Okay.
Every disclosure is on the exchange.
No, I'll tell you what the market's thinking could be because it fell. Mr. Balram Garg has only about 34%, 33.97 to be precise. If Mr. Paramchand were to, transfer more of this outside the promoter group, then the promoter's shareholding can come below 51%. Already it's come down, as you say, from 60.24 to 58. That could be worrying the market because we've seen a 2-day fall in the stock.
Actually, this 2-day fall in stock, I don't think market should be worried about the promoter shareholding falling beyond the controlling thing. Number one, there's a long way to go.
Okay.
Number two, the promoters do not have any other business.
Okay.
And it's Mr. Balram Garg who holds more than 34%. He has not sold off even a single thing.
Okay.
And together, the two of them still hold 58%. It was a small transaction, which I think any person at this age and this thing has a right to give inheritance of his wealth, small portion to his family members or to whomsoever. But let me assure you and through you to the market and the investors that the fundamentals of the company, the operating effectiveness, its strategy for growth. We opened 2 stores in April only.
Okay.
Another store is opening in the first week of May.
Okay.
We opened 7 stores in March.
All right.
So the growth pattern of the company remains very strong. Unfortunately, I cannot speak anything about the figures of our quarter 4 and full year results.
Fair point.
But I can only say that whatever guidance we had given at the beginning, we are very confident of meeting that guidance.
Okay.
So this 34% that Mr. Balram Garg holds, that will continue and there's no more selling by the promoter that we can expect, right?
It is not selling, ma'am, it's gifting. And I don't think there will be any more gifting also.
Okay.
So the promoter shareholding will remain steady now.
Okay. All right. We'll leave it at that. Thank you very much. There's a bit of a recovery in the stock price.
Yeah.
It had fallen close to 10%, now down less than 5%.
Exactly. So between yesterday and today, of course, it fell about 25%. But I think this clarification is helping that what was essentially there was... but I think the fact that it was a non-promoter entity to which there was transfer, I think that...
that must have troubled the market,
yeah,
certainly. Okay, let's move now to another factor that troubled the market yesterday as well. The rupee, now at 66.89, if I'm not mistaken. So, 66.88, 81. There's a bit of a recovery in the rupee. But where is it headed from here on? Manish Vadawan, Managing Director and Head Fixed Income at HSBC India, joins us. Manish, good morning. Should we take it that most of the negativity because of the higher trade deficit in March and the crude is in the price now? The market has adjusted fully?
Yeah, Lata, morning. I think what you just said seems to be, and I think what has happened in the last 3 or 4 months is that we saw the impact of high oil prices, high trade deficit, and the FPI slowing down their investments in India to some extent. I think the negative outflows all coming together, and in addition to that, the seasonality impact of the summers, which we see in April, May, June, also came simultaneously. It is also a correction which was, I think, overdue because rupee has been very, very stable for a very long period of time, and if we are contemplating that the current account deficit is going to be increasing now to something like $60 billion. This is what we expect. So there is definitely some kind of a small gap which opens up in the BOP. All these factors have led to this move, and also because rupee had been very, very stable for the last 6-7 months, or maybe a year, I would say, that kind of an adjustment what we have seen. Commenting on your last point, what you said, is it already in the price? It looks like that this 4 to 5% depreciation in the rupee versus dollar takes care of all these factors, but markets do overextend sometimes. So, incremental news in the next 1 or 2 months can have further impact also. So it might overextend a bit, but yes, it has adjusted to the new facts.
A word on the yield market as well. It's been stuck in this 7.73, 7.75. What next? Today we have an advanced auction, something that was to have happened yesterday is happening today, and the state auctions. Do you think even that is priced in? And at 7.8 there are buyers?
Hi, Lata, I think the auctions will sell, and the yield adjustment has been pretty high. It is now, even after the minutes which were released from MPC, it is definitely, the yields are factoring in, I would say, at least 2 hikes from here onwards. It's a demand-supply mismatch which is hovering around, but we sense that these are the yield levels where you could see some markets stabilizing, unless or until you see some kind of a shock from either international markets, international bond markets, or the oil prices. But as of now, it looks like that things should stabilize around these levels. We are seeing adequate demand at this point of time at these yields.
Okay. In fact, many, just coming back to that discussion on the rupee, many brokerages have now started cutting their forecasts on the rupee, expectations of 67, etc. What are you expecting over the next 3 to 4 months that the range of the rupee could be?
Sonia, I think our own research houses moved their rupee forecast to 66 by year end, which was around 62. I think, and a lot of other houses are also acknowledging the same fact. I think the change in the macro environment has led to this kind of a thing, and it is quite justifiable. But I would again reiterate that in the short term, these forecasts can be overextending. We have seen some kind of an FPI outflow in the last 1 month. I'm talking of month of April, on account of equity and debt both. And if we do not see the adequate flows, inflows, what we're talking about, this mismatch can lead to rupee actually sliding even more in the short term. But I think in the medium term, this adjustment of 66 to 67 looks pretty fine, and it might hold till the year end also, because there are a lot of FDI flows lined up during the course of year, but the timing is very uncertain about them.
Okay, Manish, thanks for joining us and giving us your view. So that's the expectation of the rupee 66 by the end of the year. That's the forecast for now. For the market, it's still flat actually, but some of these stocks like PC Jewelers, Reliance Naval continue to be the talking point, down almost 8 to 12%. So not looking good. In fact, the entire power infrastructure space also coming off quite a bit. JP Power is down, HCC is down almost about 6%. Reliance Power, JP Associates, all under pressure. So just keep an eye out on that. The market breadth is also now veering towards the declines. Yeah,
but it's quite okay for the market, Sonia, because it could have easily gone down quite a bit today, but it's still holding on. Once again, we are trapped in that range. 10,550, I think, on the way down, 10,620 on the way up. Bank Nifty is slightly weak, but let's see if that one can pick up. For now, of course, that one is looking a bit interesting. Today is, of course, the full expiry as well, so that is also going to be an important one to watch out for.
Okay, well, let's move on now and talk about a couple of numbers as well. A strong top-line growth has driven earnings for Reliance Nippon Life AMC. Sandeep Sikka, the Executive Director and CEO of Reliance Nippon Life Asset Management, joins us now to talk about that. Sandeep, hi, good morning. Can you start by telling us what are the factors that has driven the top-line growth in this quarter?
Thanks a lot for having me. I think this is the first financial year for us post-listing, and I'm very happy to share with you. I think if you look at the Q4 numbers, I think we have grown, the profitability has grown from 120 crores to 155 crores, 162 crores, which is 35% increase. And also for the full financial year, the profit has gone up, or profit after tax has gone up from 402 to 522, which is again increase of 30%. I think we're very happy to see, I think both the top line, I think, grow at about 26%, the bottom line grow at 30%. And clearly this is getting reflected, I think, because of very strong inflows in the mutual fund industry. I think while we have seen a lot of flows have been coming into the mutual fund industry, but what we have been focusing on is in the retail investors. We're very happy to share with you, during the last financial year, Reliance Mutual Fund got the highest retail inflows in the mutual fund industry. And even if you were to look at from a post-demonetization point of view, we have got the highest retail inflows into the industry. So for us, the focus remains long-term profitable growth, and we continue, we see a very big opportunity, especially both across India and Bharat. I think we have increased our branch network, which has got touched 280 branches, which is the largest branch network in India, and we have also seen our digital sales double in the last 1 year. So I think we're very excited about the opportunity that lies ahead, and I think clearly we are seeing operating leverage coming in to play.
Okay, Sandeep, good morning. So what's been the AUM growth year on year, and also what's the retail asset growth?
I think if you were to look at it, I think overall as an AMC, we have gone up from 3,50,000 to nearly about 4 lakh crores, which is as an AMC. And as a mutual fund, our AUM went up from 2,10,000 to 2,45,000. Overall, the number of investors increased from 68 lakhs to 82 lakhs. And this is systematic investment plans. At this point of time, we have 25 lakh systematic investment plans. We started there with the annualized book of 5,300, and I think we have closed the year at in excess of 9,000 crores, which is again, almost an increase of 70% in SIPs. We are adding about roughly 1 lakh new investors every month. And also, I think clearly, as we are seeing, more and more new investors are coming from small cities and towns, which has been a focus for us.
Now, at this point, what is the debt to equity mix in the AUM?
If you were to look at, the overall, out of the 4 lakh crores, the mutual fund business is 2,45,000 crores. Balance is offshore, pension and others. So if you look at the mutual fund, out of the 2,45,000 crores, 85,000 is equity. And overall, our equity percentage has gone up from 28% to 36% as a share. And I think we continue, with the strong SIP flows that we have seen and the book that we are building up, the equity portion will continue increasing further.
Okay, final question then. How are the flows in SIP in top 15 cities and outside the top 15 cities?
No, I think while we've been seeing growth across the country, the mutual fund industry has always been concentrated in the top 15 cities. I think what we are seeing is post demonetization, the flows coming from the smaller cities have been much stronger. And also just trying to give you a number for the industry, for the overall industry, while the B15, which is the beyond 15 cities, the share is 18%. For us, that share is about 22%. And I think continue increasing that market share. And which, like I mentioned earlier also, post demonetization, the highest flows that have come into the mutual fund industry we have got the highest out of 1,90,000 crores. Reliance Mutual Fund got 30,000 crores. So clearly, going forward also, we expect the flows to continue increase. The momentum will continue in smaller cities and towns. Having said that, we remain, whether it's to do with small cities or big cities, I think the penetration of mutual fund industry remains dissimilarly low at 2%. And clearly, there's a huge opportunity for both small cities and big cities. But the kind of execution capability that we have shown in small cities and towns, we clearly see ourselves disproportionately gaining in these markets.
Okay, Sandeep, thanks a lot for your time today. Good luck for next financial year. That's Reliance Nippon. Good numbers from the company. Some good news from ADAG Pack, of course, after a long time. But for the last leg of the show, Rupee is also with us. Rupee, hi, good morning.
Good morning, Anuj. I don't want to take any credit in favor of the bulls, but I was just looking at the market right now. It seems that along with some of the commodity stocks, Reliance is taking things higher for the time being.
No, you are the good champ, Rupee. You should take full credit for that. Why are you saying that you should not take credit? Do take credit. Okay, let's move on now. Sterilite Tech has posted a steady quarter. Anupam Jindal, CFO of Sterilite Tech, is with us. Anupam, hi, good morning. Of course, we'll discuss the numbers, but yesterday you made an interesting point about, I think, the long-term guidance for the sector, about the optic fiber capacity. Just tell us, how are you positioned to benefit out of that?
Yeah, so this optic fiber industry has been growing steadily at the rate of 17% over the last 15 odd years. And that momentum seems to be continuing for another, I would say, 8 to 10 years with various generations coming in. So now we see 5G generation coming in a big way. While some of the telcos have started some trial, or they're planning some trial end of calendar 18. But the deployments will start happening from maybe early 90s or early 19s and beyond that. And till now, the countries and the companies are doing 4G rollouts, and FTTH, fiber to the home, continues to drive. So this is something which is driving the overall industry globally, and Sterilite has its share of about 6%, 7% in that market. In India, we are the largest one, so we play that role. Our capacities are at about 30 million, which is beyond India's overall capacity or demand. From our perspective, we are increasing that capacity. Last year, we had announced that we'll be increasing that capacity to 50 million, which will take it to about 8 to 10% of the global market. And we are very well on that track. We'll be finishing that commissioning by June 2019. So in about a year and 3 months from now, we will be having that capacity. And as we see our order book, we are sitting very comfortable with almost like 5,200 crore of order book, out of which 4,000 pertains to the fiber and cable business. So I think this overall growth driven by data explosion happening all across is driving the industry, and Sterilite being in a unique position is benefiting out of it.
Anupam, hi, morning. So you did mention that you're on track to achieve $100 million of profits by FY20. But tell us what happens in FY19 on the revenue front. What kind of growth are you looking at? I mean, you've already done about 25% in FY18. Is that something you can replicate next year?
Yeah, so we have been delivering this 29% CAGR growth in revenue over the last 5 years. But more importantly, our absolute EBITDA has grown by more than 45%, and that's something which we are driving because as we increase our volume, our profitability seems to be improving. So that is what we want to drive consciously. In terms of our overall guidance, we had given that by FY20 we will be achieving $100 million of PAT. We are more than confident now, having given that guidance about 9 months back. So we can see that growth. In fact, on the PAT side, we have delivered more than 47% growth over last 3 years. And in 18 also, the growth was almost like 66%. The last quarter of Q4 was about 77% of growth in PAT. But I would say that overall this growth is going to continue even beyond FY20. We have not pinpointed any number particular beyond that, but the growth is going to be quite long term. And Sterilite continues to play that global role. In fact, in FY18, our exports or sales outside India touched 54% of the total revenue, which was just about 37% last year. So from that perspective, Sterilite is gaining market share in the large market like China and Europe, and with large customers. So I think that's faring very well for us.
Sure, Anupam, but to reiterate my colleague Sonia's question, of course, your long-term outlook sounds good. You're sounding very, very optimistic. But in the current financial year, FY19, now that you're getting onto the 5G bandwagon in such a big manner, should we expect very strong top-line growth? Or should we continue to expect this 25% for the current year?
I think instead of giving a number, I would say that the strong growth will definitely continue as we are increasing volume, and some of that volume of 50 million which we are talking will also come in by the end of current calendar year. And on the top of that, we are also looking at full capacity utilization of our cable facility and our service business, which has also come up really well. So yeah, I think I can expect that our revenue will also be growing quite steadily, more than 24-25%. As I said, that our emphasis always remains on profitability, quality of profit, and returns on capital employed. So these are the two drivers I would say are very important for us.
All right, Anupam. Thanks a lot for your time today. Good luck for future. That's Sterilite Tech. Good numbers, but the stock has also rallied quite a bit. Mid caps are doing quite well in a sense that if you take a look at individual stocks, there is quite a bit of traction that you're seeing. Stock that's surging now is IDFC. Just pull out the intraday chart of that stock. It's now at the high point of the day, not IDFC Bank, IDFC, the financial company, and that one right now is up about 5%. DHFL in F&O ban, but for last 2-3 days, that's been the one which has been moving. And also keep an eye on CG Power. That's making highs of the morning. That's also an interesting stock. Expiry day today, of course. So a lot of these stocks could move based on their positioning as well. Mitesh Thakkar, Prakash Kaba, and Rajat Bose with us for Fresh Trades. Good morning to you again. Mitesh, your thoughts on market opening? Quite decent, you would say. And what about individual stocks?
Yeah, very decent, and I think Reliance is still showing good momentum. I spoke about Reliance, I think day before yesterday, looking at targets of 1,005. I think that could be met very soon. we might even see more strength towards targets of 1030, 1040 on the upside there. So that's clearly a key stock to look at. But that about, I think, two stocks which are my recommendation right now. Indiabull Realty, I think the stock clearly is buzzing with a big gap of price and volume action happening there. Buy with a stop below 214, look for targets of 235. And Tata Communication, the intraday charts are turning negative. So sell with a stop at 635 for targets of 608.
Okay, Indiabull Realty, that really is the stock of the moment now, up more than 8% odd. Prakash Gaba is also with us. Prakash, you know, not just Indiabull's real estate, but DB Realty is the other one from the same pocket that has done well. Would you trade any of these names even today? And if not, what else are you looking at?
The realty pack is...
would you trade any of these names even today? And if not, what else are you looking at?
The realty pack is looking good. DB Realty you mentioned, yes, I think is going up. Target around 75, 76, 78 zone, stop below 68. I also like Shobha. Shobha was looking good in the morning when I was looking at it. I think very good chance it can climb to around 565 zone, stop below 540. So realty pack is looking good, certainly.
Okay. The pharma rally looks like it's picking up some momentum now. All your large cap pharma, Sun Pharma, Dr. Reddy, Cipla, all these stocks are up and about today. Rajat, good morning. I don't know if you're looking at pharma. Otherwise, other trading ideas you're going with?
See, I have two buy calls. One is Mindtree. I would put a stop loss below 1037, and chances are that you would see the stock rallying, and the target would be 1083. And CEAT, I expect a good bit of short covering towards the end in the second session, and my stop loss would be below 1527, and targets would be 1565 to about 1575. I'm expecting a strong short covering rally precisely because there is a hammer line at the bottom, and that suggests that there could be a good bit of short covering towards the end.
Okay, and Prakash Gaba, your stock picks for today?
I have two, Sonia. I'll start with Shriram Transport. That looks good. Seen a good base formation out here. It can climb to around 1690 zones, stop below 1620. And among the technology pack, I also like Tech Mahindra. I think this is the place where it can climb up from short covering, could propel it to levels close to 710 zones. Stop below 680 should be fine.
Okay, Mitesh, just one follow-up. Aurobindo Pharma making highs of the morning.
Yeah, so Aurobindo Pharma, I think, gave a good breakout 2 days back, completed a pullback, held on to the supports of 620, 622 and is bouncing back. I think yesterday's low was 620 half, which I think keep a stop just below that. I think this has gone into an uptrend, and you will see the stock head towards 665 or possibly even 680 over here. So I think good risk reward equation, the setup is quite positive.
Okay. All right, gentlemen. Thank you very much for your trading ideas. Of course, we'll keep coming back for more through the course of the day. Right now, it's time for a quick break. We'll come back with all the commodity cues on the other side.